Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 8th of June. We're in a fairly finely balanced situation at the moment, and the themes we've been seeing this week are likely to carry on into next week. On the plus side, we've had something of a bazooka from the ECB, a €600 billion stimulus in addition to its PEP programme, that's the Pandemic Emergency Purchase Programme, was rather larger than the 500 billion expected, and indeed takes it well over $1 trillion as the ECB makes its own efforts to stop the effects of the pandemic. There's also hopes that the US may follow up, and even the UK in due course, with some additional fiscal stimulus as well. That has basically been on top of a 130 billion fiscal boost from Germany as well, not traditionally a nation you'd expect to be doing such things. And that kind of improved sentiment has meant that the markets as a whole have had a reasonably good week. What will continue on, however, is a few things that are overhanging. Obviously, we've got the escalating US-China tensions. We've still got the US economy in reasonably poor shape for the moment. And also, of course, we've got the fact that the breadth of the rallies we have seen tend to be more skewed towards technology shares rather than a broad-based recovery. All that being said, markets are moving in the right direction. In the year to date, the Dow Jones is now down just 8%. Quite a performance given where we were in March. The S&P 500 down just 3.7%. Nasdaq continues to move ahead. It's actually now up 7% in the year to date. And the FTSE 100, whilst trailing behind, is now down around 15%. Although it's been a fairly good week for the FTSE, which has seen a near 6% jump over the 5 trading days. In terms of companies reporting next week, there's 3 FTSE 100 companies to look out for, the first one of which is the IT and software solutions company AVEVA, not to be confused with the insurance company. This is AVEVA. They've had a fairly torrid year to date, down about 14% the shares there, obviously hit by COVID concerns, so given its particular exposure to the oil and gas sector. So in terms of its full year numbers, it will be interesting to see whether it can build on its previous success, because over the last 2 years the shares still are up over 60%. Also due a trading statement from British American Tobacco. This is one with a South African court case ongoing at the moment due to the tobacco ban there. So any guidance in terms of trading generally will be very much appreciated. We've recently had an update from its competitor Imperial Brands. British American Tobacco tends to be one of those where the dividend seems reasonably safe. They're currently yielding around 6.5%, so any guidance there would also be welcome. And finally, Matthey. This is the car filter emissions maker. Very badly hit, of course, because car manufacturing plants have largely been closed for the last few months. The shares are actually down 24% in the year to date. And again, it's going to be a question of looking out for any guidance and or improvement coming from the company. Thank you for watching. Have a great week.